two things when I think about small and medium enterprise or regular ordinary business. Two things stand out for Uganda, and those are the areas in which we performed well. The African Financial Markets Index is a measure of the financial market, and the financial market is basically the banks, the stock market, all those that system that basically works to get savings and investments and put them together. So Uganda's financial markets was basically ranked 10 out of 20, and the score has slightly improved from last year. Still the same position as last year, but there are two main areas among the six that are measured where it performed really well. One is access to foreign exchange, and that pillar we performed, we got the highest score, I think of about 77, and we were third of the 20 countries, first in East Africa. The key reason why we performed that well is we have very liquid foreign exchange market. For a simple, ordinary businessman, it means that whenever you want, you can buy and sell dollar, pound, euro, Kenya shilling. So for the businessman, there's confidence in the economy that you can actually carry out your business comfortably. You can import, you can export, because there's good availability of currency. Unlike certain countries, maybe like South Sudan, where people are selling in pounds, South Sudanese pounds, but don't have access to dollars. And it really, really affects business. Talk to a small businessman who's in South Sudan and is trying to get their money out to go and import more things. Those are the challenges other people have. Uganda doesn't, and that's why Uganda has performed very well. There are areas for improvement also, and those may not directly affect the small businessman, because the small businessman will be keen on looking for finance or capital to grow their business, and the capacity of local investors. Actually, that pillar where we performed fairly low focuses on size of pension assets. So those are domestic savings. Actually, if those savings are channeled correctly, then the local businessman can be able to get finance. But if we only had an alternative stock market, for example, in Kenya there's a stock market for small alternative index, smaller companies, where now the ordinary company would now go and say, I can open up my books and you can track my spending, you can track my purchases, and that is very key for the development of the financial markets. We are a bit low on transparency, but if there was good transparency and people were willing to open up and be transparent about how they run their business, it will create a step or a development in our markets, because then people who have excess money are more comfortable to put money in their business. So Uganda still has a way to go, in that there has to be a change in mentality, because a lot of people want to work on their own. We have not yet graduated to where a lot of the developing countries or developed countries are, where people are very open about their business, they're very open about their affairs, and as a result, they can go and sell a small portion of their company to get equity. Equity is more patient than debt. It doesn't have a fixed repayment. Though there may be requirement for a higher return, still the pressures of a loan versus equity are different. Yes, so if a small businessman was aspiring to grow and become big, he'd basically start thinking about how transparent can I become, how can I align in financial reporting standards as one of the things that is measured, and which we could do better on. If you're accounting properly, you're keeping your books properly, you're declaring your taxes, you have a proper organization structure and all of that. Those things enable a company to be able to confidently come to the financial market and raise capital, because they are totally open. So that's an area for improvement. It's an opportunity for the smaller businesses. Eventually, if we create those alternative places for listing or alternative index, then the small business will be able to access alternative sources of finance. I mean, right now, small businesses still go to money lenders, for example, and yet a money lender is charging exorbitant rates of 10 to 20% per month, compared to even the highest microfinance, which may charge 3% per month, which is 36% per year, is still cheaper. But that lack of information between the people who have money and those who are looking for money, the lack of will, I won't say desire, will also, or even desire to open up and do business the right way, meaning by opening up your books and you're actually saying, this is how much I've spent, this is how much I've paid myself, this is how much I'm paying my workers, this is how much I've paid my taxes, this is what I've gotten, this is what I've spent, these are the profits. That trust, we need to build trust in the local economy, because without trust, we cannot grow. We have to be trust. We need to trust enough to open up our businesses in terms of being transparent about how we carry our businesses, such that people can have the confidence to invest in them. Yes, so that is one of the key things I think for Ugandans we may need to graduate into to be able to attract